Picture this, just weeks before the holiday season kicks in, and right when the global economy is already juggling inflation, interest rate fears, and tech supply chain headaches, President Trump pulls a surprise move. On August 11th, 2025, he announces that the U.S. will extend its tariff truce with China for 90 more days. That's 3 extra months where the 2 biggest economies in the world hold off from slapping punishing taxes on each other's goods. But why now? What does it mean for American shoppers, Wall Street, and even the microchips in your smartphone? And more importantly, is this just a political move or a real step toward peace in the trade war? Let's break down the full story, piece by piece. So by the end of this video, you'll know exactly what's at stake and how it could affect your pocket and the global balance of power.
Section 1. The breaking news and what's at stake. What happened? Trump extended the tariff truce with China for another 90 days, pushing the next escalation deadline to early November, November 9 or 10, depending on official timelines. Why this matters? Just days before the deadline, tariffs on Chinese imports were set to spike from 30% back to triple-digit levels. That would have meant immediate price jumps on everything from electronics to toys to machinery. Political backdrop? Trump made this announcement after weeks of speculation that talks had stalled. Both sides agreed to keep existing reduced tariffs in place while they negotiate unresolved issues like technology transfers, intellectual property theft, and fentanyl exports. Economic breathing space? This extension gives American importers, especially retail chains prepping for the holiday rush, more time to get goods in without sudden cost hikes.
Section 2. How we got here. The anatomy of the truce agreement. Spring Agreement 2025. Earlier this year, both sides dialed down aggressive tariffs. The U.S. cut duties from 145% to 30% on certain Chinese goods, while China reduced its tariffs from 125% to just 10% on American products. Why the truce was fragile. Despite the tariff cuts, underlying tensions never went away. Disagreements on industrial subsidies, rare earth mineral exports, and data security kept negotiations rocky. The August extension. Trump's move essentially freezes the situation at its current tariff levels, holding off further hikes and keeping a delicate peace. Timing. The November deadline is no accident. It falls right after the U.S. midterm political season and just before peak holiday sales, giving both leaders room to show progress without immediate economic pain.
Section 3. The economic ripple effect. Consumers, businesses, markets. Stock market reaction. Within hours of the announcement, U.S. markets rallied, with the Dow and S&P 500 ticking up as investor fears of a trade war cooled. Oil and commodities. Oil prices also rose slightly. Traders expect smoother global trade routes to boost demand. Business relief. American companies importing electronics, clothing, and furniture breathed a sigh of relief. This pause means their holiday inventory won't face last-minute cost surges. Consumers. While this truce delays pain at the checkout counter, economists warn that if tariffs rise again in November, consumers could absorb up to 67% of the costs through higher retail prices. Global supply chain stability. Asian markets, especially South Korea and Taiwan, also welcomed the move, as both economies are deeply linked to U.S.-China trade flows. Section 4. The tech twist. Chips, revenue sharing, and security. Special tech deal. As part of this extension, U.S. chipmakers like NVIDIA are allowed to sell certain high-end processors to Chinese companies, but with a catch. They must give up to 15% of the sales revenue to the U.S. government. Why it's controversial? Supporters see it as a clever way to profit while maintaining national security oversight. Critics argue it's a dangerous precedent that mixes commercial trade with government profit-taking. China's perspective. Beijing accepted the deal for now as it maintains access to critical AI and data center hardware, but experts believe they'll accelerate domestic chip production to reduce dependence. Long-term stakes. This part of the truce isn't just about money. It's about who controls the future of artificial intelligence and advanced computing.
Section 5. The Road Ahead. Scenarios for November. Optimistic scenario. A Trump-Xi meeting, possibly during the South Korea Regional Summit this fall, could produce a more permanent tariff rollback and new trade terms. Pessimistic scenario. Talks collapse and tariffs skyrocket just as holiday bills hit, sending shockwaves through global markets. Wild cards. Geopolitical flashpoints like the South China Sea, Taiwan, and new tech sanctions could derail progress. Why the clock is ticking? Every day closer to November means more uncertainty for global businesses, investors, and political leaders. The 90-day countdown is as much about public perception as it is about economic reality.
So here we are, 90 days to figure out whether the world's two biggest economies can keep talking, or whether we're about to step right back into a trade war. The stakes aren't just political, they're personal, touching everything from the price of your phone to your 401k. The question is, will November bring a breakthrough or a breakdown? Let's talk in the comments. Don't forget to subscribe so you don't miss the next chapter in this global economic drama.